Good afternoon. We are coming to you live via the Facebook pages of the Bangko Sentral ng Pilipinas and the Financial Stability Coordination Council. Welcome to the release of the FSCC's first semester 2021 Financial Stability Report. The FSCC Chairman, BSP Governor Benjamin E. Diokno, is joined by the FSCC Executive Committee members, namely Insurance Commission Commissioner Attorney Dennis B. Funa, Philippine Deposit Insurance Corporation President Dr. Roberto B. Tan, and Securities and Exchange Commission Chairperson Attorney Emilio B. Aquino. While he will be unable to join us live, Department of Finance Secretary and Monetary Board member Carlos G. Dominguez III has prepared his short remarks for us. We also recognize the presence of other FSCC Executive Committee members. BSP Deputy Governor Chuchi G. Fonacher, DOF Undersecretary Gil S. Beltran, IC Officer in Charge for Technical Services Group Director Arturo S. Trinidad II, SEC Commissioner Attorney Apiro Luis B. Amatong, and Special Member National Treasurer Rosalia B. De Leon of the Bureau of the Treasury, as well as officers and staff of all FSCC member agencies. At this point, FSCC Chairman and BSP Governor Diokno will deliver his opening statement. Governor?
Ladies and gentlemen, friends from the media, good afternoon. Today, the Financial Stability Coordination Council publishes the Financial Stability Report for the first semester of 2021. The FSR is an outcome of continuing efforts of your financial authorities to be transparent on what we see and what we clearly intend to do moving forward. Our technical secretariat will provide the highlights of this latest FSR shortly. A year into the COVID-19 induced recession, we now expect GDP to return to positive growth rates within the year. However, recent estimates suggest that COVID-19 has taken away some of the opportunities that we expected prior to the pandemic. We do understand, however, that there is a great deal of uncertainty that accompanies any of this forecast of the future. And with the uncertainty, risk aversion in financial markets may not be too far behind. International agencies all suggest that the global economy is now recovering. Yet, this recovery is happening at a different pace across different jurisdictions. There is now divergence between advanced economies on one hand and emerging markets and developing economies on the other. This divergence is an essential element of what lies ahead. It creates spillovers that put the smaller economies at a disadvantage. This means that new risk may arise as we recover from older risk. We must address this before it becomes systemic. We recognize the innate uncertainties that come with forecasting the future. This is more so for a once-in-a-lifetime shock, such as COVID-19. As such, we suggested in this latest FSR that it would be better to paint a picture of what the future needs to consider. This will allow stakeholders to use that picture and plan backwards, determining what needs to be done today. This is our thinking in preparing Chapter 2 of this FSR. We discuss education, retail trade, and commercial real estate, all of which play a critical role in the new economy. While Chapter 1 tells us what we have seen over the past year, Chapter 2 paints a picture of the future for the three industries. Chapter 3 describes how we will execute the agenda of managing systemic risk. Here, we talk about the key risks that we focus on, the preemptive tests that we will run, and our strategy to share our financial stability story to all our stakeholders. We shall do this now specifically in the context of Executive Order number 144, which the President just signed earlier this month. There are clear signs of stability. Market conditions remain very fluid. Vigilance is required as we protect our gains while mindful of any further vulnerabilities. Systemic risk management has always been a whole of market agenda. The FSCC is ready for the daunting challenges ahead. This is not for our own account, but always in collaboration with all stakeholders. I invite everyone to download the FSR, which you will find in the respective websites of the FSCC member agencies. Do let us know what you think of it so that we can be better in the service of the Filipino people. Thank you.
Thank you, Governor Diokno. We will now listen to Finance Secretary, Monetary Board Member, and FSCC Executive Committee Member Carlos G. Dominguez III for his short remarks.
Diokno, Chairman of the Financial, fellow members of the Council and workers, friends in the good afternoon. Here this month, President Rodrigo Duterte institutionalized the financial Executive Order number 104. This underscores the government's strong commitment mitigating systemic risks in our financial system, protecting our avoidable shocks that would set back our progress. Institutionalization not have come at a better time. Pandemic put our financial stability under great stress. Fortunately, the administration tax and economic policy reform set us on a stable fiscal footing ahead of the. This strong financial enabled us to deploy all that was needed to meet the global health crisis head-on. Further preempt financial economic threat posed by the pandemic, need to undertake systemic risk assessments on a basis, having a better understanding of brewing risks is necessary for calibrated actions and policy intervention. This is the way modern government should operate. We should anticipate threats rather than merely react to problems after they have broken out. The FSCC's goal is to reduce uncertainties and to spot underlying vulnerabilities in our financial system so the government and its stakeholders can make well-informed decisions. The potential challenges are all contained in its financial stability reports released every semester. Today, we will be launching 2021's first semester report. The assessment made by the FSCC in this report is based on current developments that will shape our national agenda for recovery. This will arm our agencies with the necessary tools to allow them to take swift action against possible risks while discharging full responsibility and prudence in undertaking them. On the part of the Department of Finance, we will continue to exercise judicious financial management to maintain our fiscal stamina and ensure the resilience of our economy. We are keeping our powder dry for a protracted battle against the pandemic and other challenges in the future. Rest assured, we are doing our utmost to safeguard the health of our financial system, to enable it to continue serving the needs of the public and support our ongoing recovery efforts. We will always be vigilant against the risks posed by the pandemic while taking advantage of opportunities that will help restore our country's economic growth trajectory. Thank you.
Thank you, Secretary Dominguez. The FSCC Secretariat will now provide us with a short presentation on the latest FSR. On that note, please welcome BSP Senior Assistant Governor and Head of the FSCC Technical Secretariat, Dr. Johnny Noe E. Ravalo.
Thank you very much, and good afternoon to all our viewers. It is my pleasure to deliver a short summary of the Financial Stability Report. What we have done for this semester's report is rather different from previous approaches. We have 3 chapters. The first chapter looks back at what the year has been. The second chapter looks forward to what it could be in the new economy. And the third chapter bridges the first and the second chapters. So 1 year into the crisis, what exactly do we know? We know that COVID has eroded incomes and it has displaced a lot of livelihoods, and in the process displaced our sense of normalcy. With that sense of normalcy comes the uncertainties, and the uncertainties come risk aversion. We also know that COVID is not an equal opportunity shock, so that different communities are hurting differently. As the governor has said, we fully expect growth this year. We are on our way towards recovery. However, on the second point, we also know that that growth is coming from a lower base because of the effects of COVID. And there is substantial differences between the effects across different countries and across different groups within the same country. The third point in chapter 1 is that markets remain very fluid. There are uncertainties that remain about our future, not only in terms of what can be forecasted, but really about risk behaviors, how people change in their consumption, how people change in their choices. And to that effect, we believe that there are some structural changes which growth momentum alone cannot address, and therefore requires a little bit more intervention. And finally, on the fourth point in chapter 1, I introduced the term that our colleagues in the financial market are well aware of. Systemic risk has risen. And this is not a bad thing. This is a recognition that of the effects of COVID on this economy as well as any other economy worldwide. But it is this recognition that we need to partake of to make sure that all of these risks do not escalate to systemic risk. And on that point, we actually see a lot of opportunities. In chapter 2, we talk about the future. And in previous FSRs, we suggested that forecasting the future is difficult because of the uncertainties that COVID has created and because of the structural effects of COVID. So if forecasting the future is really difficult, our sense in the FSCC is to work backwards. By trying to paint a picture of what to consider in the future, we may be able to create the steps forward. And we talk about 3 specific industries. First, we talk about education. Education being the pipeline to our future employment and to the skill sets that we need to recover as an economy. The challenge is not so much that there is a shift from face-to-face to blended. The challenge is that there are 2 things that are changing. First, the needs of the economy itself is changing. And second, the way we train students is changing. So those two things come to bear, and we believe that there will be a cohort of about 5 to 7 years of students that will be directly affected. The second industry that we talk about is that of retail trade. Here, the COVID impact of income erosion is very telling. This is a story of changes between the haves and the have-nots, a story of the essentials versus the non-essentials, and a story of purchasing in-store versus online. As we try to open the economy further, these issues about divergence have to be addressed as well. The third industry that we look at is that of commercial real estate. Analysts would know that when you take a look at commercial real estate as a percentage of GDP, it is remarkably small. But it is also an industry which is very active in the development of the economy as well. Here, the issue is timing, because it takes time for developments to be completed. And there have been several developments that have already been delayed, and new developments that have to be rethought as a consequence of the engineering and health concerns of retrofitting. In chapter 3, we look at how we will do all of this work. Having seen the past year and having a vision of the future, just exactly what will the council do? There is this issue about surveillance and our model of CL2 risks. We talk about contagion and concentration and our models of network analysis. We talk about liquidity and leverage, and here we use growth at risk type of models. I'm happy to share with you that our macroprudential stress test is nearly complete. If you can give us just barely maybe 2-3 weeks, we should be able to share with you some of those results. It is the first of its kind in the country, and we shall be able to provide the insights of that stress test. As we close chapter 3, we talk about our communications strategy. And here, I wanted to share with you specifically what we're trying to do. There are 5 foundational messages and 5 targeted audiences. Let me very quickly go through all 5. The first one, the whole is greater than the sum of its parts, is normally attributed to the philosopher Aristotle. That is actually a misquote. If you go back to the original work in Metaphysics, 350 BC, the actual wording is, the whole is something besides the parts. The point of these quotes is to talk about the context of emergence. I won't bore you with the nitty-gritty and technical details, but the point of emergence is that the whole is different from the sum of its parts. That is the nature of systemic risk. We do not simply just add the risks to the system and risks by the system are different in their own regard. This talks about the second message, which is that the nature of systemicness is not about the size of the shock, but its ability to disrupt. It is contagious. And in that sense, the notion of COVID is a perfect, although very unfortunate analogy. Systemic risk is also very difficult to anticipate. But the nature of the work is that we need to provide for a financial system that makes it stronger and more resilient to these shocks. We also know that systemic risks affects different stakeholders differently. And on that basis, this issue of distribution between the haves and the have-nots, the opportunities and the challenges, the vulnerabilities and the strengths need to be discussed. And then finally, not all risks are systemic. It covers a great deal of aspects in the financial market, but certainly not all vulnerabilities are systemic in that regard. It is about the long view. And to cap off this summary, if I may take from what the governor has said, both in this FSR and also on repeated occasions, This is a once in a lifetime crisis. We need to be able to adjust, we need to be able to adapt. But in trying to anticipate the exigencies of today, the governor points to the balance about sustaining the future. And in that sense, COVID-19 is not only about a disruption of today, it is our transition to the new economy. Ladies and gentlemen, after this brief presentation, the FSR, which shall now be available on the websites of the FSCC member agencies, and I invite everybody to please download their copy. There are only 3 chapters. It's straightforward. I promise you, you won't see any equation. You'll see a lot of graphs, but no equations. And I hope you can let us know what you think of the report. Thank you very much.
Thank you, Dr. Ravelo. Our FSCC principals are now ready to answer some of the relevant questions that you may have. In addition, the Secretariat asked the International Monetary Fund and the ASEAN Plus 3 Macroeconomic Research Office, as well as the Bankers Association of the Philippines, for their insights about the latest report. We will share with you in a little while what each of these institutions has to say, as well as the candid insights from our FSCC principals through this brief exchange of views. Dr. Ravelo will now moderate the discussion. Dr. Ravelo?
Thank you again. Governor, let me start with you, if you don't mind. 1 year into the crisis, we can now see the full effects of COVID. No need to forecast or take away seasonalities and cyclicalities. But there seems to be a lot going on in the market right now, either from the Delta variant of the COVID to the revised growth projections, as well as to the developments in the advanced economies. How do all of these issues now stack up to the work of the FSCC?
Yes, markets are fluid, but it would really be unusual if they are not. I think that it is fair to say that all this fluidity is more visible because of COVID. These changing conditions explain why managing systemic risk is about vigilance and preemptive thinking. We should not get too focused with today's temporary disruptions, and instead consider the longer-term issues that can sustain our future. This is actually the narrative of our FSR, and we share this narrative so that our stakeholders can be well informed.
Governor, if I'm intrigued by the thought about preemptive thinking and vigilance, it's of course something that financial stability authorities regularly talk about. But how difficult or how realistic is it? As a classmate of mine once asked me, could you really have forecasted the 97, 2007, and the 2020 pandemic?
That is a valid point. The task is really daunting and difficult. The point of financial stability is to assess all reasonable possibilities and not a forecast of the most likely outcome. Regulators need to intervene because different stakeholders are affected differently. These differences affect the welfare of the system. So yes, vigilance and preemptive thinking are difficult, but we still have to invest in making the system healthy in good times and to withstand unexpected shocks in stress times. This is why we pursue financial stability as a policy objective.
Thank you, Governor. That point about different stakeholders being affected differently, I think, is something that needs to be amplified a little bit in terms of our discussion points. Let me, as mentioned earlier by our moderator, Alicia, we have asked comments from the IMF, AMRO, as well as the BAP. And if I may ask our colleagues to please flash at this point the comment from the IMF. This is the comment from Mr. Yong-Seng Yang, the resident representative to the Philippines of the IMF. And taking off from the point of the governor that different effects on different groups need to be looked into, Yong-Sen makes the point about the the value of having in-depth analysis on the scarring effects of COVID. I think he refers specifically to the three industries in Chapter 2 of this FSR. He also makes a point about the institutionalization of the FSCC through the executive order, and that is something that we all believe in the Council to be a major development. But it also takes a view that if you want to take a look at the granularity of the issues, then you're taking a longer term view. Now, if preemptiveness requires a longer term view, I would imagine that the insurance industry or the contingent market industry would be most affected as well. But Commissioner Dennis, the last time we looked at, I believe the percentage of premiums as a ratio of GDP, what is generally known in the market as penetration rate for insurance product, is only about 3%. So given the modest size of the contingent market, would forward-looking issues, systemic risk, be an issue for your industry? What do you think, Commissioner?
Firstly, good afternoon to all our colleagues and friends. And if I may just commend you on the latest financial stability report, which was prepared by your office. Our industry, the insurance industry, is a natural counterparty for those who can absorb our supply of short-term liquidity, and for those who can fill our demand for long-term assets. The industry supplies a considerable amount of investable funds, of course, coming from the premiums of the insuring public, and of course, from the invested funds through the VUL insurance products. So this balance sheet structure highlights why systemic risks matter to our industry, the insurance industry. We saw with COVID that market yields can adjust quickly, and liquidity must be ready when contingent events unexpectedly materialize. So this is not about market size, but the nature of the risk itself. Even under normal conditions, managing systemic risk is part of the global best practice for insurance supervisors. Markets are indeed fluid, and we must be responsive to changing conditions. So vigilance, preemptive thinking, and if I may, risk awareness definitely fits into the framework of the insurance industry.
Very well said, Commissioner.
Thank you.
At this point, let me put on screen the comments of our colleague Matthew Yu from the ASEAN +3 Macroeconomic Research Office, AMRO, which is based in Singapore. The point of Matthew is that the FSR talks about the issues and the risks beyond the traditional focus on the financial system. He talks about the interlinkages between firms and the interlinkages between financial institutions and financial institutions to the private sector. These interlinkages, according to Matthew, is a better way to understand those risks and gives us an insight to the transmission of risks. Before I ask Chair Emil and President Bob for their takeaway of the FSR, let me try to share a little bit of an outside insight. Growing up, and this will date me because most of the people I know don't even remember this show. There was a show led by David Carradine. He was very young then, so you can imagine how old the show was, called Kung Fu. And in one of those episodes, he was a young monk being trained by his master, and I guess the old-time version of Yoda for the Star Wars fans. And they get robbed on a journey. They prepared everything, their tin cans, their clothes, but they still get robbed. And the first question of the master when they get back to the temple was, so what did you learn from the episode? And this is a line that I've never quite forgotten. And the answer was, learn to expect the unexpected. That is the very nature of systemic risk. As Tom Dennis talked about risk awareness and markets changing very quickly, the governor talking about preemptiveness. Systemic risk really is very difficult, but it has to be focused on. At this point, let me turn to the SEC and the PDIC. Chair Emil and President Bob. I'll start with Chair Emil. What would be your takeaways for this FSR?
Okay. First, I'd like to say first, Dr. Noe, I did watch that show Kung Fu and I love it. Just more or less, our age would be the same if that's the case. So anyway, the key point is that the financial system works, okay, because it offers different things to different people. Well, interlinkages matter, but we also must think of the balance between diversity across firms within the market and the synergies that these firms create from working together. So this balance between competition and cooperation is my takeaway. We see this in the three industries discussed in chapter 2 of the report. And the same is certainly true for our capital markets. So stakeholders must come together to address common issues, even if each one presents itself as different from others in the industry.
Very good point, Chair Emil. This balance between competition and cooperation really drives markets. President Bob, how about you?
Thank you. Well, I really value the comments of the IMF and AMRO, and systemic risks should be understood by looking at granular risk behaviors and network analysis, which presents a useful way of doing so. For deposit insurers, the task is more than paying off claims, definitely, and we all agree that interlinkages matter, so that it is the health of the system that is at stake. Studies also show that deposit insurance affects behaviors differently in normal as well or against stress conditions. These 2 points present areas to consider for the PDIC. And I then look forward at chapter 3 now of the FSR with keen interest. The surveillance approach, the preemptive tests, and our intent to communicate strategically are important steps forward in order to understand changing behaviors rather than in hindsight.
Thank you, President Barb. Again, the nature of forward-looking approach is being highlighted by President Bob, which is in chapter 3. Let me then go to the third quote from the Bankers Association of the Philippines this time. This is from President Wick Veloso of the BAP. In the comment of the BAP, they point out the systemic risks coming from the way industries interconnect, but the key is to resolve the issues quickly with a view of the long-term sustainability. Again, this balance of what needs to be done today cannot be done or cannot be resolved without considering its longer-term effects, which actually brings us back to the very first point raised by the governor and chairman of the FSCC about vigilance and preemptive thinking. Let me stop there for the moment on the discussion and check on the questions from the press.
Thank you, Dr. Ravelo, and to all our FSCC officials for an insightful discussion. At this point, we are now ready to entertain questions from our media friends. The first question comes from Lawrence Agkawili of Philippine Star. He asks, credit rating agencies have expressed concern about economic scarring in the Philippines. What is your take on this and how do you intend to address this?
Okay, thanks, Lawrence, for your question. We've always known that this is a different kind of crisis, with effects being longer and deeper. We have also anticipated the economic scars as what we've stated in our previous FSRs. Much of the analysis are in Chapter 1 of this latest FSR, and our general approach can be found in Chapter 3. While we have interventions and prior actions on our table, we have an FSCC meeting in 2 weeks' time where we will reassess everything in the light of Executive Order number 144.
Thank you, Governor. The next question comes from Lee Chipongyan of Manila Bulletin. Her question is, since the BSP has the mandate for ensuring financial stability, is the BSP also conducting macro scenario testing exercises as suggested by the IMF?
Okay, thanks, Lee, for that question. Yes, in fact, we're almost done with the macroprudential stress test, as mentioned by Senior Assistant Governor Noet, and we can find that discussion in Chapter 3 of the report. In developing said stress test, we have taken a whole of market approach, given that pressures are outside the financial system, and this is why the initiative is being undertaken under the umbrella of the FSCC. Our technical secretariat may offer a little more details on this.
Thank you, Governor. Just a quick picture, if I may have the screen flashed very quickly. I hope you can see the screen. This is actually in the FSR already. So these are not drawings, these are results of the analysis. So the drawings that you see on screen are actually the result of an algorithm that allows us to map who is related to whom across firms, across industries, and across countries. So give us a few more weeks, Lee, and we should be able to present the full analysis. Thank you.
Thank you, Governor, and thank you, Dr. Ravelo. Lee has a second question. She asks, what are the steps you plan to take or are implementing already so that the FSCC will have more influence in managing systemic risks now that you have the EO?
There's no question that the FSCC provides the venue for financial authorities to come together to address brewing systemic risk issues. We will take the opportunity of the next meeting to reassess based on the continuing review provided by the Technical Secretariat. We stand by the state of financial stability, which we reported earlier, that is also in Chapter 1, this latest FSR.
Thank you, Governor. We will now take 3 additional questions from the floor. We have a question from Warren de Guzman of ANC. Business leaders have agreed to a hard lockdown to stem the spread of the Delta COVID-19 variant. How do you think this will impact the financial stability of the Philippines?
Would you like to answer that, Noet?
Well, this is just another turn in the road. As the governor mentioned earlier, things are very fluid, and we try to, and going back to my Kung Fu example, we try to expect the unexpected. I wish I can tell you, Aaron, that I have the antidote to the Delta virus right now. I don't. But in terms of financial stability, all of this, what could be, are part of our scenario analysis in terms of the stress test. So we'll get to that point quickly when we report the stress test results.
Thank you, Dr. Ravelo. The next question comes from Wendy Noble of Business World. You mentioned key sectors such as education, retail trade, and commercial real estate. which will see immense changes in the post-pandemic world. Can you explain the relationship between these sectors and your prior findings on risk related to debt servicing? How will these industries be affected after the pandemic's impact on debt repayments?
Take
Right.
that, Governor. Sure. It is actually in chapter 2 of this FSR where debt plays a factor in each of the industries. The schools have debt exposures. The retail outlets have debt exposure, as well as the buyers, the regular consumers have debt exposures, and certainly real estate developers have debt exposures. We try to explain in chapter 2 what it actually means for the future. So if I were you, please download your copy quickly, and it should be all there.
Thank you, Dr. Ravelo. The last question comes from Eileen Mancias of Abante. The latest financial stability report says debt servicing is the primary risk at this juncture. When the servicing of debt is at risk, a downgrade is a possibility. Ratings agencies haven't taken into account these liabilities. How is the BSP bracing for a downgrade, and how will it affect banks and other institutions?
Well, if you look at the ratings, the rating agencies, only 1 out of 4, including the Japan rating agency, has actually downgraded the outlook, but not our international rating agencies. So let's not be too pessimistic.
Thank you, Governor. We are glad to receive more questions. If you have any for questions that the Council will be unable to answer this afternoon, you can send them to us in writing and we will answer you accordingly. At this point in time, we will request for a short photo opportunity with our FSCC principals through a screen capture. We would like to request the Governor and SAG Ravelo to please stand together near the middle of the table so that we can take a short picture. Okay, the first photo. Are we ready? Let's just, sirs, okay. I will do a count. Okay, thank you very much, sir. So 1, 2, 3. Okay, and another safety shot, please. Okay, I will count again. 1, 2, 3. Okay, thank you so much, sirs. So again, we would like to thank FSCC Chairman, BSP Governor Benjamin E. Diokno, the FSCC Executive Committee members, the Council's Technical Secretariat, members of the private sector and multilateral agencies, our media friends, as well as everyone on Facebook who are viewing us this afternoon. For follow-up clarifications and comments on the FSR and/or any FSCC-related inquiries, the Council may be reached at fscc@bsp.gov.ph or through Facebook at facebook.com/fsccph. Our telephone number is 53062938. Ladies and gentlemen, this concludes today's release of the FSCC First Semester 2021 Financial Stability Report. We appreciate everyone's time and attention. Again, will be available for download on the websites of the BSP and the FSCC member agencies shortly. We will now end our broadcast. Maraming salamat po. Mag-ingat po tayong lahat at magandang hapon.
Salamat po. Thank you.
Thank you, Chairman.
Bye-bye. Thank you.
Okay, thank you everyone. Bye-bye.